Gold took 38 years to break $1,000. Now it's adding $1,000 every few years. And that's not normal growth. It's an alarm bell. And the question is, why is this happening? And what does it say about where we're headed? So let's break this down. You see, gold crawled to $1,000 an ounce by 2008 after decades of stagnation. Then it took 12 years to double that. And now the real kicker, from 2000 to over 3,000 in just 4 years. In fact, it's been only a month since gold crossed $3,000 an ounce and it's already rocketed to 3,340 within that same time frame. So that's over 10% growth in a few weeks. And we're no longer on a gradual slope. This thing looks like it's about to go vertical. And so the real question is, why now? And what is gold trying to tell us? It's good to look at it in 3 parts. You got the slow burn, the acceleration phase, and the final surge. And this, my friends, is something worth talking about. All right, so I want to take a minute, share my thoughts on this gold rally that we're witnessing right now and how it's too hard to pass up the idea that gold is starting to steal all the thunder in the financial markets because it's being exposed for what it truly is, a global monetary safe haven as well as a private wealth preservation tool for the average investor. So in this video here, I want to share my thoughts in reference to these phases I just mentioned and go into them a little bit more in depth to give you a little bit of a history, the present, and probable future that we face as we're witnessing all this monetary destruction implode. But as always, if you guys want to hear more of these quick takes, definitely take a minute, hit that thumbs up button to show your support for the channel, drop a comment down below. I love being able to check them and see what you guys are keeping your eyes on as well as your thoughts. And then if you're new, make sure you subscribe so you never miss a quick take when I put one out. And as always, if you did the previous 3 requests, then go ahead and do the 4th one, which is to share it with family and friends so they can find out an alternative perspective as to what's really going on. So here we have an interesting visual aid that I came across on the internet highlighting the progression of gold price by $1,000 an ounce within these 3 segments we got behind us on the screen here. And so it's these 3 phases here that I believe tell an interesting story. But what's not on here, at least not yet, the area that's going to be right here by the side of my face here, which is that exponential curve that looks like it's coming, but more on that later. So the first phase I want to touch on is what's called the slow burn, and that's the 1970s to 2008 time frame. So for nearly 4 decades, gold moved slow and steadily like molasses after the U.S. ditched the gold standard in 1971, and then prices rose quickly at first, peaking in 1980, as we can see on the side of the screen here, but then went flat for years, which just happened to coincide with the idea that we went off a standard that was solid when anchored to gold to a free floating currency, a debt IOU monetary structure, which happened to replace the idea of having something tangible with future promises to pay. And even during that time frame, it appeared that inflation cooled down, or the way they calculated was changed several times, and then the dollar seemed to slide while central banks kept a tight grip on monetary policy. Gold became a forgotten asset, seen more as a hedge than an opportunity. But here's the twist. That long lull wasn't a sign of gold being irrelevant. It was a calm before the storm. And so gold held steady as a reserve of last resort. And it was waiting quietly for fiat currencies to overextend themselves. And that's exactly what happened. And what do I mean by that? Here in 1980, purchasing power for the Federal Reserve note was listed here at 117.9. And fast forward to this time frame, it's 31.3. And that's a significant drop. But it really doesn't tell the true story. As I always say, the destruction of our purchasing power and its actual unit itself is actually apolitical, meaning it has no interest or involvement in politics directly. It's just a preferred tool that the private central bankers have used to hijack our nation's currency. Next, we got the acceleration phase, which was approximately between 2008 and 2020-ish before the medical situation hit. And of course, this red to green connection here was a result of the 2008 great financial crisis, where we know central banks slashed interest rates to zero and printed trillions of dollars all just to prop up the system or to extend the remaining years of the system to where we're at today. And at that point, gold finally cracked through $1,000, of which some people thought it was a fluke, a reactionary spike. But the QE era turned into a policy normalcy, and suddenly gold wasn't just a hedge, it became a barometer of trust. And trust in the fiat system began to evaporate even more. And then by 2020, gold touched a 2,000 mark. It had taken just 12 years to double after needing 38 years for the first leg up. And why is that? Because the system was breaking. Currency debasement, ballooning debt, and geopolitical instability were no longer hypotheticals. They were front page news, what seems like every few months or so. And then next we got the surge, which is the blue line over here, which started in 2020 and has a big to be continued on the other side of the blue there. And so here's where it get wild. From 2020 to 2024, gold went from 2,000 to just over 3,000. And so that's a $1,000 increase in just 4 years. At the same time that the M2 went from 15.5 trillion to what it is today at $21.74 trillion. Since mid-March, we've seen another jaw-dropping leap from just around 3,000 to what's now 3,300 and climbing. And that's all within a few weeks. So the last question is, what's changed since then? Well, a couple things. We got relentless money printing and the pressure with all the central banks around the world starting to cut, except the Federal Reserve. We got the de-dollarization narrative that's still there, where it's becoming more obvious that nations are racing gold, dumping U.S. treasuries as a result of all this tariff talk and other things. Then you got the ongoing idea of war and instability between the Ukraine-Russia situation and the Israeli-Palestinian situation and other wars that don't even get mentioned on the mainstream media, which all keeps nations having to continue to ramp up their defensive spending budget. At the same time, the current administration run on the idea that there's no point in having useless wars. He's now changed his tune, talking about the idea of having at least a $1 trillion U.S. military budget. And my question will be exactly what do they have planned on how they're going to spend that one? Last, you got the loss of faith in fiat currency because the Federal Reserve, which has been the reserve currency, even though it's required for everyday transactions here in America, the rest of the world are clearly beginning to rethink how much of this currency they want to keep a hold on to. And so at the end of the day, gold isn't just rising because it's shiny and scarce. It's screaming that something's wrong. And the people that know this is running for safety. So based upon how this graph is set up here, this small blue line here, and the idea that within 4 weeks we've added approximately $300 to the price of gold per ounce, it's very probable that this blue line can go vertical, which will resemble the move closer to $1,000 at a time, whether it be within a month, within a week, God forbid, just days, to where the price goes from $3,300 and some change today to $4,400 to $4,600 to $4,700 to $5,800 in a worst case scenario. Because right now those numbers sound kind of high. I'll let your imagination run as to where it could go if we reach that point where we say that we're going to face a crash and burn scenario. But I'll save that narrative for another day. There's no point in giving you all this information, showing you these graphs, if I don't also remind you of some possible strategies to consider. And as always, if you guys have not yet taken advantage of the opportunity to get the most affordable 24 karat gold that you can actually hold in your hands in a variety of weights, we got the most affordable one here, which is the Utah Gold Back, which has 1/1000th of an ounce of gold in it for about $7. Or we got the Wyoming 50 unit, which has 1/20th of an ounce of 24 karat gold inside of it. So once again, there's something for everybody, regardless of your budget. And in my personal opinion, it's a great way to dollar cost average out of a dying Federal Reserve note into something more stable, true, tried, and tested. And if you're looking to find out more, click the link in the description or just go to buygoldnotes.com and do what you do. But other than that, taking a minute, share my 2 cents on this. Curious to hear your thoughts. Drop a comment, take a minute, share this so more of your family and friends can find out what's going on from an alternative perspective. And I'll catch you on the next quick take. Enjoy your day.